Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am super thrilled you're here, and I am super excited with who I'm interviewing today. She is a very good friend of mine. Her name is Fettke, and she's the co-CEO and co-founder of the Real Wealth Network. Now, if you don't know who she is, then you're really not moving around much in the podcast world, because she's got two top 10 shows, the Real Wealth Show and the Real Estate News for Investors Show, and they're both, like I say, in the top 10. Superhuman being. She's also a member of my Multifamily Boardroom Mastermind. She gets interviewed all the time on CNN, CNBC, Fox, Wall Street Journal. She was named top 100 most intriguing entrepreneurs a couple years in a row. I could go on, but she really needs no introduction. Welcome to the show, Kathy.
Thank you so much.
It's such a treat to have you on. This is going to be a lot of fun.
Yeah.
So you know, now Kathy, her is in lots of different asset classes. And I think, we can talk about some of that, or, I think it'd be fun just to dig into, I know you just spoke at a friend of mine's show in Denver on market cycle. So maybe let's just go straight there. Let's talk about where you feel we are in the cycle, because you've got your Real Estate News for Investors show, so you're always studying what's happening in the market, and that's why these networks are always leaning on you for counsel. So why don't you talk to us about how you feel like where we're at?
You bet. I mean, gosh, it's a little bit terrifying, isn't it? First of all, I want to say the sun is shining right on me, so I hope it's okay. We're going to see it change as we go. It's a little bit terrifying when you read the news, right? Because this is what I was telling people. I tell people I've had 4 keynotes this month, and the first thing I say is, I have a background in the media. My degree is in broadcasting. I worked at CNN and ABC, and I've been at Fox.
I didn't know that. Wow.
Yeah, in San Francisco that was my early career. And, back then there wasn't a whole lot of competition. There was a few cable shows, but, not the internet, not the news that we get bombarded with. And so it's very confusing today to understand what's really going on, because there's so many opinions. I can tell you with all certainty that the way that news media makes money is by having an audience. And the way you get an audience is by scaring people.
Scaring the hell out of them. Yep.
Scare that, if it bleeds, it leads. And, now, back when I started, there were just a few stations that were watched for news. And today there's so many, so they have to get even scarier. They had to have crazy headlines that have you go, and if it's like recession around the corner, well, you're probably going to read that article, right? So we have to really look closer at the data and really just understand that it's marketing. They're just trying to get your eyeballs to be able to sell advertising. That's the bottom line. So when you really look at the data now, I like single family homes. I like multifamily. We build homes. Building a wine village. Like there are a lot of asset classes that I'm in, but at the end of the day, I do love residential, whether it's single or multifamily. So we've got to kind of look at the data there. And the data is showing that we still have an incredible lack of supply of housing, and mainly with builders having a tough time ramping up after the last recession. They're getting better and they're building more, but it's expensive. And land costs have gone up, labor costs have gone up, regulations have gone up, and being in the building industry, it's been challenging over the past 3 to 4 years for sure, to be able to bring on new inventory. And yet, in the last 10 years since the last recession, we have 25 million more Americans. Our population is growing. We have the highest record household growth. We've got wage growth. We've got, growth, lots of growth, and not enough housing to keep up with it. And based on some of the studies that I look at, one is, I think it was Metro study, there was a there was a chart that showed that we may not be at equilibrium with supply and demand until 2025.
Wow.
Yeah. So when
Wow.
you hear all these things about a recession, there could be a recession potentially in some places. There could be maybe in the stock market there'll be an effect, but in housing, we're not going to be the problem this time, at least in my opinion. Do your own research. Don't take my word for it.
No, that's a really valid point. The other piece that's happening as well is we become a renter nation.
Yes.
And millennials don't want to be tied down, and so and there's God, I don't know that they'll ever fix the affordable housing crisis in this country.
And that's a big opportunity, isn't it?
Right. Yeah. You were talking about geographic specific pullbacks, and we saw a lot of that in 2008. Now, of course, I was in ground zero here in Florida. I thought we were set for life, and 80 million baby boomers getting old and getting cold, we'd be good. And same in California and of course Nevada, and those were all ground zero for that crisis. But what was interesting is there were areas of the country that really didn't pull back that much at all.
Correct. Yeah.
It is kind of strange. Now, I really like what you said about the fact that that pullback could be specific to different parts of our economy versus being and not be driven by real estate like they were last time. That really makes sense to me. It could be stock market driven, and now there is some. Of course, a lot of craziness in politics, and we won't go down that rabbit hole. But who knows what's going to happen in November of next year, and obviously there are things that you worry about as catalysts for something to happen, terrorism or things of that nature. But no, what you just said really makes a lot of sense. So let's talk about. Did you want to expand on that anymore, or have you pretty much said your piece on
well, I mean, just there is so much fear. I like I said, I've been the keynote at 4 different events this month. I talked to a lot of people. There's a lot of fear, but when we see the headlines, we have to know that there's a positive and a negative to everything. So if you could see the recession coming in 2008, and for some people, they could see it. They could see that, wow, these loans are going to go bad. People aren't going to be able to pay them. It was very predictable because if you pulled up, I was a mortgage broker at the time, and if you pulled up the data, you knew that these loans were going to start resetting in 2008, 2007.
Well, and if you fogged a mirror, you could borrow money in 2006. Okay, which was, talk about a recipe. And yeah. Anyway, sorry, I interrupted you. Please.
But it was predictable, but nobody could see it. But it was as obvious. Now you look back and go, well, of course. How could those people now? That when I was lucky enough to have the Real Wealth show back then, and I had Robert Kiyosaki on, and people like that with years of experience, they've been through downturns. That's the benefit you and I have, is we get to interview these people that have been around maybe longer than we have, and can see these things. And for him, it was the most obvious thing in the world. And because he could see it coming, he was able to help. He was able to sell all the assets that wouldn't survive that kind of a crash. So on the show, he said, you got to sell everything in California, or at least he said he was selling all of his assets in California, because in 2004, home prices in California and Florida too went up almost 40%. That's not sustainable.
Listen, in 2005, in 2006, my net worth went up $17 million in 1 year.
Yeah.
Okay?
That's amazing.
It was crazy. And then I lost it all, of course, that story, but
that was what was happening.
You had your show back then. When did you start your show?
Oh man, I'm like the old wise sage in this business. Now they're calling me a pioneer, which I'm grateful for, and I'm also like, man. Anyway, it's hard getting old, but
you're gonna have a lifetime achievement award here real soon. Then you're in real trouble. Oh, that's funny.
So yes, I was doing the show back then. It was not a podcast because that didn't exist. It was in San Francisco on a radio station.
Okay. So you had him on, and he's like, "I'm selling my California stuff."
He goes, it's the writings on the wall. You guys, there's the price. You can't have prices go up 40% with people who don't know how to pay the loan back and think that's going to work out. Okay, so he sold everything. he showed me how in Texas at the time, nothing was happening. They didn't have crazy loans. The home prices were 26% undervalued. So he said he sold everything and bought multifamily and single family in Texas. So I did the same. You know, Rich and I bought like 9 properties in Texas. Those properties did amazing. We ended up helping hundreds, if not thousands of people do the same thing and sell all their California holdings, exchange into Texas. And like you said, because not all markets are the same at the same time, California had peaked, but Texas had not. Texas was just at the beginning of its boom in 2005.
So to drill down on what you just said, where we are right now, I mean, I will tell you, we're actively, we've got LOIs out on 11 properties. We're kissing about 200 frogs to find a deal. Now, we've closed on 1,000 doors, this year, or maybe even a little more than that. But I'm scratching my head sometimes when I see what some of these properties are trading for right now. And I'm concerned. If there's any pullback at all, they're not going to get the returns they're quoting. Now, they may not lose the property. They could, but I know they're not going to get the returns that they think they're going to get. So, back to your point about geographic, I mean, do you feel like are you willing to share publicly if you do feel this way, or do you feel like there's any pockets like that now? And, based on what you know now, any areas that, that you think, let's talk about that.
There's, lucky for you, the area between Tampa and Orlando is the fastest growing in the country. And according to John Burns Real Estate Consulting, he consults home builders like us, and he's seeing that the demographic shift towards the Southeast it's massive.
It's happening. It's starting. I was just ahead of my time with my thought process. Yeah, that's woulda, coulda, shoulda. Yeah. So
you were just early, and prices had gone up because of bad loans. That's all. But now it's heading that way. But I'll give you a kind of a difficult story I'm going through right now. We bought an apartment about a 250 unit apartment in Mountain View across from Google. Great location, lots of job growth, but it was expensive. It's California. I know you would never ever. All right.
I'm sitting down. What was the per door cost?
Too much. I don't even have it in front of me, but it was high.
All right.
But the business plan was not to do necessarily we weren't just going to renovate. We were going to re-entitle from 200 to 800 units, and then tear the thing down and rebuild.
How exciting. Okay.
Yeah, and just do the entitlement of that and flip it, basically.
Okay.
And we had done a lot of entitlement deals like that. Yeah, we had an entitlement deal in Dublin where we bought an office building, an old office building, and we knew that the city of Dublin wanted more housing. This is right outside of San Francisco. So we basically we did a lease option on this office building. In that time, the 2-year option we had another 3rd year just in case, we were able to re-entitle it to residential lots, tear down that office building and build, build out some lots for builders and just sell that. We didn't have to build. And we expected we'd get $14 million for it. We got 20. So It was a very, very profitable thing. So I love entitlement when it goes well. When it doesn't go well, it's really difficult. So on this apartment building, it really, the idea was to entitle it to 800 units. We did. Mountain View desperately needs housing. There's, no affordable housing in California, and 30% of this was going to be affordable. Unfortunately, because in the last 3 years in California, the regulations for building have become worse even when they need more housing.
Wow.
So in the process, it took longer. It's about a year delayed. We just got the entitlements, just put the thing on the market. And then our Governor Newsom, passed a bill on rent control.
Oh my God.
That voters voted down last year. The very bill we voted down, he passed. How is that possible? Anyway, the bottom line is the timing has been terrible. We're not getting what we thought we were going to get. And So, so it's just important to understand.
So what's the lesson? What's the lesson? Let's go. Let's talk about the lesson in all that, because
Yeah.
wow, you know, to retitle something from 200 to 800 doors, that's you know, you're back flipping all the way to the bank on that.
Oh yeah.
So you know,
So what happened?
who knew? You know, who knew? You know, like regs. You know, I was just thinking, you know, I have an interest in the Airbnb phenomenon. Okay, you know, there's some people out there that are leasing houses and then Airbnb them and just making a lot of money. But you know, that's another industry that, and I don't want to go too far down the rabbit hole either, but where regulations can just literally put you out of business.
Yeah, so I would say the really important, and now we don't do business in California anymore, but this project we got in when we were still able to make a ton of money. So it was just in the last 3 or 4 years that these regulations have really, really gotten out of control, which is ironic, right? This is a time when we're seeing less regulation, just not in California. So, you know, the bottom line is you really got to pick your market. And I know you do that. You go into markets that want your business, that are business friendly, where there's less regulation. We're building homes now in places like Nevada and Reno, and building apartments there because they want us there. You know, so you got to.
That makes such a huge difference. Oh, you know, I mean, in getting your entitlement and getting your permitting and getting, you know, just so many benefits to being in a business friendly environment. But
exactly.
So okay, so that's the lesson is really be more geographic focused, pay attention to where you're, you know, this market and the sub market that you're investing in. So you say you're building.
That's one, but I definitely want to tell you the second important thing that I learned, and I see this a lot, and I know you do too. I know you're conservative. I know you don't want to, you know, you don't want to go through what you went through before. I don't want to go through what I went through before. So one of the things that I'm seeing, and where we got stuck on this one, is short-term thinking. So, you know, a lot of people are buying apartments and, you know, planning on doing the, you know, deep value add, and then, you know, and marketing it in a couple of years, which is similar. We were just doing an entitlement, but you know, it's not that different. You're basically buying something, fixing it, and trying to sell it for more. It's basically a flip. That's what a lot of people are doing on the deep value add. They're not necessarily buying an apartment for the cash flow. They're buying it to fix it, improve it, and flip it. And so it's important to understand the difference, because a lot of people are saying, I want to buy apartments for cash flow, which they should, but they're not buying them for cash flow. They're buying them to do something in a couple of years. And that's fine as long as you have a backup plan. So in this case, that's the key. So let's say you can't sell it for what you thought, or rents didn't go up, but you bought it at a good enough price that you can still hold it. And that you didn't over leverage. These are the things. And I'm seeing too many people not having a backup plan. I'm not going to say any names, but I met with a very big name. I don't think anyone that's been on your show, but somebody who buys a lot of apartments. And when we discussed this at dinner, at the VIP dinner, and I was like, well, what's your backup plan if these value adds don't, you know, if you're not able to sell them for what you're expecting? And he didn't have one. And I said, well, what's your backup plan if you can't get the financing in 2 years that you're expecting?
That's the bigger one. That's the
bigger one.
He
had no plan. In this
so he's using, so what he's doing is he's using bridge debt, which, and by the way, guys, bridge debt is the hard money lender equivalent of residential. Okay. So when you know, you're in the single family space and you go find a hard money lender and you're paying 12% and 5 points, that's what a bridge lender is. Okay. And I've heard so many horror stories, and that's the thing that, and Robert and I talk about this all the time. That's the thing that is the most dangerous.
It's so dangerous.
Because if they can't refinance, you know, there are bridge lenders and their business model is to end up owning property. Okay.
Absolutely. That's how we get our deals, right? From people who can't pay their note.
Right.
And that debt is what will take you down when you've got bad debt. The thing about multifamily is you don't have to take those kind of risks. You can get long-term debt. The difference is people, we're gamblers a lot of times. We want big returns. If you're going to hold an apartment for cash flow, what would you say people should expect if we're not doing the flipping model, we're buying it for cash flow? What kind of return should people be expecting?
Well, I mean, I will tell you what we insist on, and it's hard to find. Like I told you before we started recording, we're kissing 200 frogs right now, but our minimum is 10% cash on cash over a 5-year period. That's our starting point minimum. Now, the first couple of years we may only be at 5-6%, and then but we make it up, once our repositioning is done. But that's our minimum return, projections, based on. Very conservative, by the way, based on competitors and how we feel we'll fall into the competitive landscape with our rents and the demographics and everything. What's your answer?
Well, it just depends. Like we were going to build an opportunity zone apartment in the Reno area because there's such a demand for jobs there.
Right.
It really, you have to hold it for 10 years. So the return over 10 years, it's not 16% or, some of these big numbers that we're seeing in pro formas. It's the longer you hold it, it just kind of comes into, it just becomes normal cash flow and the rate, I guess what I'm saying is people need to kind of understand the difference between holding for cash flow and flipping because the returns are going to be different. And in the opportunity zone, I remember I'm talking to the developer going, well, these aren't very exciting returns. He's like, well, that's the cash flow you get from an apartment. That's how it works. If you're holding, let
me say this. I mean, it's, And our IRR projections are typically over 20, and again because we're very, very picky, and these are and our numbers are with very conservative loan to value. I mean, I'm thinking about our Texas asset. We're at 65% loan to value with those numbers.
Awesome.
Okay? Yeah.
That's great.
And we're very, very careful with bridge debt. But where was I going with this? No, that's the thing. I was just listening to Tim Ferriss's podcast, and he was interviewing a astrophysicist, and they were talking about how you can play with numbers, and they were specifically talking about statistics, but it tied me back into how people are, you can make a pro forma look any way you want it to look, and so guys, those of you that are investing passively, you've got to learn this business. Come see me in LA. Kathy, you better be there, by the way. I'm going to be in LA January 17th, 18th, and 19th, and you better come.
It's my anniversary, and that is where we're spending it with you.
Okay. Well then, all right. By the way, Kathy's in my mastermind, and she's so busy, and she's always getting pulled every different direction. She's missed the last couple of minutes. You were sick at one of them. At one of the last
I was there, and I was so sick I couldn't believe it.
Yeah. I remember. All right. Well, anyway, the point is, guys, if you're thinking about investing even passively, come to my event so you get a basic understanding of what you're looking at. Don't invest in something unless you have at least some basic understanding of what the heck it is. Don't give someone your money. And I'm going to tell you, there are operators out there like Kathy just referenced. This must be somebody using bridge debt, thinking he can, do whatever he's going to do and refinance or sell. And if that rug gets pulled out from under you because of cap rate expansion or you don't hit your mark, you're going to lose. Those properties are going down. They're not just going to not have the returns. They're actually going to get lost. And so very, very important you have that understanding. By the way, Kathy, I'm going to do, and I did this in Baltimore, I'm going to do an all-female panel on Saturday night at the LA event. And I did this in Baltimore. There were 10,000 doors on stage between 3 women, and I want you on that panel Saturday night. So just know that.
Okay, I will be there.
All right. Anyway,
like I said, it's my anniversary. What better way to spend it?
Okay, well, I will definitely announce that. 50,000 ears are going to hear that in a couple weeks. But all right, good. All right. So we talked about market cycle, and again, what you said is really compelling in that. It likely is not going to be a real estate driven recession because all the markers are positive. It could, who knows, again, stock market, but we also talked about a lesson you got as far as investing geographically. let's, talk, you are fantastic at getting investors. I mean, you've got 44,000 plus members in your network. Okay, let's talk
close to 50,000.
That's dated. No kidding. My bio is updated as well. And awesome. So talk about localized methodologies for people to brand themselves and or start building a network like you've built. You're the queen of that. So give some advice, as to how somebody can, if they want to build their own network, what advice would you give them?
I'll tell you what, Rod, there's never been a better time to make a name for yourself. It's, you came to me when you were just starting out and,
right?
And then bam, I'm like, wait, how did he?
Five downloads. And I'm about to hit 7 million.
I watched you go and you came to me brand new, not knowing what you're doing. And then I turn around and your ratings are ahead of mine. So you're the one with.
You're right. And it's funny. I asked the question, but listen, I don't want to interrupt you. I just did a Facebook Live on a version of this question, but I want to hear what you've got to say. So you're right. The time could never be better. Expand on that.
It's incredible. I was on a panel with 5 other women just a month ago. And, these women really honored me. I couldn't believe it. All of them said that it was me that inspired them, that kind of like crushed the ceiling or whatever, broke through the ceiling, that kind of made them feel like they could do it too. And I had no idea. I was so really, truly so honored.
Such a blessing when you hear that.
It was so sweet. But by the end of the panel, I was kind of sitting there the same way I sat with you going, what? I inspired them, but then they just took off.
Wow.
And I'm talking about in just a couple of years. Some of these women are buying hotels. Some are buying multifamily. Some are doing senior housing. And they just started and they're killing it. Nice. And they all have a following. So I see this more and more with these people who come in and they just crush it so quickly. So it's not actually that difficult. You have to be committed. You have to be passionate. You've got to be willing to bring, if you bring in experts, like, you start a podcast and bring you on or me, and you can build your following very, very quickly. I'm teaching my own daughter this. I'm like,
What's her vehicle going to be?
She literally isn't sure she wants to follow mom, because that's what kids do. Someday she will. But she likes art. Now, I don't know how she's going to make money in art, but, we've paid money for art. So people do make money in art. Like, you can make money in anything, but she's focused on art. So I said, well, just do a meetup and see what happens. So she did. And she had, 50 people that wanted to come to her event where she was going to teach them how to make, something. And so, we're in an environment today where people can find you pretty easily if you're very targeted and you offer value and you care,
No, I'm gesturing in the background because I'm so excited about what you're saying. And yes, care, authentic. You really do care about helping them. That's so critical. And the key is adding value. If the people that add the most value on this planet are the most successful in the world. Okay. And so, but the point is, if you go out there with the mindset of adding value, your success is inevitable. But you said something else that is really important. You said you need to be passionate, and to be passionate, you have to love it. And so guys, if you're listening, if you don't love whatever it is you're doing, for God's sakes, go do something else. This is not a dress rehearsal, this thing called life. Okay. Yeah. So, and if you don't love it now, associate pleasure with it and learn to love it, or go do something else, because that's the only way you're going to be passionate about it. You truly have to love it. And that's the only way you're going to inspire other people to invest with you or get involved with you, is if you're passionate about it. So it all goes back to making sure that you really love what it is you do. Would you agree with me?
Yeah, absolutely. I mean, there's too many obstacles. I saw you had the tornado situation.
Oh, we had 101 all the families had to move. That was horrific.
That's very similar to, my experience with our multifamily in Indiana, where we had the gas leak.
Gas issue, yeah.
Yeah. So, if you don't love it, it's hard to get through those kinds of difficulties.
Yep.
You just have to be able to roll up your sleeves and dive in and fix it and love that even,
Yeah.
And not everybody does. So, dive in, understand whatever it is you're doing. When I started, and I'm sure when you started, you were reading everything. You were getting training. You were going to mentors. I mean,
sure.
I've got
books. I've got books on my desk right now. I'm still learning. I was just looking around. I've got stacks of books, and that's learning is earning. Bottom line. It's funny, and back to adding value. When I started mine, I used to tell people, I'll never sell you anything. All I care about is I want you to succeed, and I wanted to get that message out there. And of course, now I'm a liar, but that wasn't by design. I was, once I hit 1 million downloads, kind of like, hey, I better do something with this, otherwise I'm a moron. But I actually, the truth of it is I started taking free phone calls from listeners, and I got so much freaking pleasure from that. And like you do, it's so rewarding. I've got a wall behind me with hundreds of thank you cards. We get so much pleasure out of, adding value and loving what it is we do. It's just an incredible blessing.
You've helped a lot of people, Rod. It's really
well. Likewise, 44 or 50,000 people in your network. Good Lord. Well, but guys, back to what she was talking about in that question about how to build. It's and this is, I did a Facebook Live on this. There's meetups, there's podcasts, there's LinkedIn, there's Instagram, there's Facebook. I've got almost 31,000 people in my Facebook group on multifamily. We've never lived in a time where there are so many opportunities to create reach.
Yeah.
But the key is passion and adding value. And if you go at it from that angle, your success is inevitable.
Yep.
Kathy, I really appreciate you being on the show. It's such a treat to talk to you. And, you always add incredible value. Guys, check out her podcasts. She's a hitter, Real Wealth Network, and then the Real Estate News for Investors. And I can't wait to see you in January.
Thank you. I can't wait.
All right. Take care. See you later.
Take care. Thank you so much.
All right. Bye-bye.
Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.